how long does it take to incorporate?
One business day.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, thanks for joining us for another episode of Ask Spurrell CPA. Today we're talking about how incorporation doesn't have to be hard. I have Trevor here with me again here today. So Trevor, it's a Easter Monday and it's just us in the office today, right?
Yeah, it's nice.
Yeah, there we go.
Nice and quiet. It's a good time to get focused work done, and those tasks that otherwise would be fighting with space, time, and other people in the office, and I could just settle in and focus in on those KPIs that we are trying to accomplish and get done for our businesses.
Right on.
Yeah.
So the quote that we have here today, we're going to go way back. We're going to do a Confucius quote.
Okay. Oh wow.
Life is really simple, but we insist on making it complicated. And the statistic is Intuit, the makers of QuickBooks. They'll say only 11% of business owners will actually seek professional help. Now, the story that we have here, we're talking about incorporation doesn't have to be hard. Business owners, they think that incorporation that is either going to be too much work. Therefore, they just don't incorporate. They continue to operate as an unincorporated business. They miss out on all the benefits of incorporation. And Trevor, what are the questions that these business owners, what are the questions that they should be asking?
So number one question is, what is the top personal tax rate for small business taxes in Alberta?
So the top personal rate, the top personal rate different from the small business rate. The top personal rate is 48%. Now, as opposed to the small business tax rate is 11%. So we're talking about almost half. You make $1, you pay 50 cents, so 48 cents. That's going out, as opposed to 11 cents on the dollar on the small business tax rate in Alberta, which is fantastic. We have one rate that is absolutely terrible, and we have another rate that is fantastic. And we have to do what we can to access that rate.
Yeah, no kidding. So what does that mean if you're trying to accumulate wealth?
Yeah, so put this in perspective. For a business owner, they have an extra $1,000, and they want to use that extra $1,000 to increase wealth, to fund retirement. And if they're operating as a proprietorship and they're at a top marginal rate, they're going to have $480 of that $1,000 go out towards tax. They're going to have $520 of which to invest. That same business owner who wants to accumulate wealth in the corporation can pay $110 in tax, 11% on that $1,000, and then they're going to have $890 to invest. So the corporate owner has $890 to invest, as opposed to the unincorporated business owner, they have $520 to invest. That $890 to invest is going to grow far quicker, far faster than that $520. The incorporated business owner is just going to get rich a lot quicker, which is recently why the federal government looked at that rate and thought about clawing it down, but they backed off once they saw how entrenched the small business community had that rate.
Yeah. So what does that mean if you're trying to buy equipment for your business?
Yeah, it's the same thing. People think, okay, I'm buying equipment, so that doesn't apply to me. I want to buy a truck. I want to buy a welding machine. I want to buy an X-ray machine. That doesn't matter. That's a business expense. That's not an expense. That's an asset purchase. So in order to purchase an asset, we have to make money. We have to pay tax on that money. And then what's left over after we pay tax, now we can buy that equipment that we want. So that same business owner has $1,000 to buy equipment. If they're not incorporated, they could have paid as much as $480 out, and they only have $520 left to buy equipment. Or if they're incorporated, $1,000 that they made in profit, they want to buy new equipment. Now they pay 11% tax. They have $890 to buy new equipment. So the incorporated business owner is going to be able to get that equipment that they need to drive their business forward quicker, because they're simply paying less tax on those corporate profits.
That makes a whole lot of sense to me. So now, if you don't incorporate, does the risk of being sued personally increase?
Yeah. So not only are you're paying more tax, your risk of taking on a personal liability increases. So it's not absolute. If you're not incorporated, if you're incorporated, it's not that you can't be sued. It's just your risk are significantly lower, and I mean significantly lower of being sued personally. So, you're paying more tax, and also you're always, every time you go and do a job, you're at risk of being sued personally. You have your personal house on the line, your car, your personal savings on the line with every project that you do.
Wow. So now, if you don't incorporate, will some people not hire you?
Yeah, some people will just say it's a legitimacy concern. Some people will just like, oh, this person's not incorporated. They must be, a fly-by-night company. And other companies take an even more sophisticated view, saying that if you're not incorporated, there's a risk, and rightfully so, there's a risk of you being deemed their employee. And they don't want that hassle. If you try to go get a welding inspector contract on a Suncor site and you're not incorporated, they're just going to send you home, because the accountants at Suncor are really smart, and they know that if you're not incorporated, there's a risk of you being deemed their employee, both for tax purposes and for employment law purposes. So they don't want anything to do with that. So lots of times they won't hire you.
Right. So now, if you don't incorporate, do you have the same legal right to your trade name?
Yeah, some people don't realize, because you can go to corporate registries, you plunk down your $50, and you register a trade name, and people think you own that. It's theirs. But it's like a placeholder. If someone comes along and incorporates under that name after the fact, they have a bigger legal right to it than the person who simply registered the trade name previously. So if you want to protect a trade name, you should be incorporating that trade name.
So now, if you don't incorporate, could getting WCB coverage be a problem?
Yeah, there's the other loop is you're not going to get the WCB coverage that you need. So WCB likes to ensure what they call the prime contractor, because they don't want to be administering thousands and thousands of WCB accounts. So if you're going out and working on a site, and there's a general contractor, and that general contractor has a WCB number, and you come in as a subcontractor and you call up WCB and say, hey, I want a WCB number, I'm not incorporated. They're going to say, no, we don't want to give you a WCB number because you are not the prime contractor on that site. And then the prime contractor is going to turn around and say, hey, you don't have a WCB number, we're not going to hire you. So you get caught in this catch-22, and the way out of it is to actually incorporate, because if you incorporate WCB, doesn't discern anymore if you're the prime contractor or not. You're just eligible for getting a GST number because you're incorporated. That's their administrative policy.
Okay, so how long does it take to incorporate?
1 business day. A lot of people think that this is a huge, dramatic, drawn-out process. We literally meet with clients sometimes, and we have an initial meeting, and within 1 business day, sometimes the same business day, we have them incorporated. And it can be a little bit different for medical doctors or lawyers. When we incorporate those professionals, we need basically a stamp of approval from their governing body, which can take a couple of weeks. But for your average contractor, your average small business that doesn't have a professional governing body, we're incorporated within a day. It's simply you pick a name, pick another one if you don't like that one. It's a very quick process, and that's really all that's involved for the clients that come through our firm is, hey, tell us what name you want. We'll have that corporation set up for you in a day. Is really how it works.
So now, does a solopreneur need accounting software just because they incorporated?
Yeah, so if you didn't need accounting software before you were incorporated, you're not going to need accounting software after you're incorporated. That's something your accountant can look after for you. And people think that just because you're incorporated, your accounting is going to become more complex. That's really not the case. There are better ways to do it. And people don't incorporate for that very reason. They think the accounting is going to be more complex, but you absolutely do not need that just because you're incorporated. You either needed it based on the business by itself. Generally, most people need accounting software when they have arm's length employees. But if they're a solopreneur, they're not going to need accounting software, before incorporation or after incorporation if they're still that solopreneur, or, all the people working in the business are under one roof, one family.
Right. So now, can the process of making tax payments be simplified with planning?
Yeah, so the process of making tax payments can be simplified with planning as well. So, a lot of people won't incorporate because, they recognize that when you're not incorporated, you have your personal tax account. And once you're incorporated, especially in Alberta, you have a federal and a corporate tax account, or sorry, federal and a provincial tax account. And you'll also have a payroll account because now you become an employee of this corporation. And you'll have a GST account, which you may or may not need as a proprietor anyways. So a lot of families are going from one tax account to 4 or 5 tax accounts all of a sudden, and sometimes that's the reason why they don't incorporate. But if we can normally reasonably project what that income is going to be, we can agree on what amounts you're going to take out of the business every year, and we can simplify that. And we just give the business owners a schedule of what they need to pay into each one of those tax accounts every month, and they simply write a bunch of post-dated checks once a year. We hand them into the government as they become due, and to the business owner, it's like nothing has changed at all. Right. It's really just as easy as most business owners. They get a corporate bank account, they get a corporate credit card. They send in at the end of the year. They send in the 12 corporate bank statements, the 12 corporate credit card statements, and we assemble the corporate year end for them. And really, they should be having that corporate account anyways, whether they're a proprietor or not.
Right.
It offers them a degree of audit protection. But that's really all they need. So, business owners who are missing out on all these advantages of incorporation often don't realize that A, it can be done quickly. B, it's not going to change anything. They can get all their tax payments done in a schedule, write out all their tax payments once a year. They'll keep current on their tax. Literally hand in 12 statements. Get all your income and expenses flowing through one account. Hand in those 12 statements at the end of the year to the accountant. And you keep conducting business as you've done in the past, but simply you get access to all of those tax savings and other secondary benefits of being a corporation very painlessly. So I think that's what we have here today. Thanks so much for joining us again. As always, please hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds at business, and we look forward to seeing your comments below so we can respond back and potentially even address your comments as future videos. Thanks very much.